Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Tuesday, April 22nd. Happy Earth Day. And yeah, I'm just going to be going over the normal tickers, and if there is any time before the hour, I will, maybe be taking some requests. But for the time being, I do have the chat closed to my view. You guys can chat amongst yourselves, but I just want to be focusing on these tickers. And so let's begin with the UVIX, which is the 2X long VIX futures ETF, which closed yesterday up a little over 12% on the day, closing at a price of $62.66. But it does look like we are pulling back a little bit in the pre-market, trading down close to 5.5% below $60, right around 59, which is now above this red line here. And so let's see what we see. This little pop here on Monday the 21st, but it doesn't seem too strong, and also not that much volume behind it. So I am wondering if we do start to get a pullback, and maybe we retest this light blue downtrend, which is the top of this parallel channel we have been trading in for a good amount of time, but we more recently broke above it, and we broke above it and are holding above it. Here we got a test, a rejection from above that level. Maybe now that is going to be acting as the floor, which is going to be, coming down to around $40, right around there, and do have this purple downtrend right there. That does seem to coincide with that. But we are getting near the end of this red box here, which looks like it will end on the 23rd. So that's tomorrow on Wednesday. And just to point this out, I did adjust the range of the box to be 10 bars, as you can see there, which is actually 15 days, but that's 10 trading days since we had the holiday last week for Good Friday. So I did adjust that, and that is really, where I would be thinking the UVIX would be making a bottom, because I do notice, these two-week cycles with this. But yeah, then, just looking over at the 10-minute time frame, we can see that the UVIX just, went up yesterday, pulled back a little bit, continued higher, but then it does look like it had kind of this double top here. And with that second attempt to get back above 65, it does look like it got rejected there. And with that rejection, we can see that there's lower volume as it was making that attempt up there, and then it just faded lower. So that does make sense. And then, on the 10-minute time frame here, we can see that the MACD did flip green for just a little bit, but then as it was getting back up there, it could not flip back to green. It was red, and then it just kind of bled into the after hours, really, just holding those losses, but then faded a little bit towards the end of the after hour trading with this gap down into today, and then just holding lower and actually having hit a low during pre-market of it looks like 58.25. But, with that being said, looking at the UVIX here, let's look over real quick at the VIX, which is the market volatility index. Closed yesterday up over 14% on the day, which is just a little bit more than the 12% that we saw on the UVIX. But this closed at a price on Monday, the 21st, at 33.82. But it does look like, kind of a spinning top there, bigger wick to the upside than to the downside. So it doesn't really suggest a lot of strength, but we don't have the volume over here. So, like I said, with the UVIX, volume is lower. But the the VIX here is trading above 20. And so that does suggest, we're still in a volatile market, which I'm sure none of us are surprised by that. But maybe we do find some support around 28, maybe 24 with this orange line here, which goes back to, let's see, the highs that we hit after the big run up in August. So on August 5th, hit a high of 65.73. Then when we came back, bounced, we hit a lower high at 23.76. And so maybe that will be acting as support as if we do pull back some more. But we do have this light blue uptrend here. That's probably not that significant anymore, but on our way up, we did get rejected from there before pulling back, forming a bull flag before launching. And so maybe now just kind of the opposite of that, we're forming a bear flag. And so I might just do a little Fibonacci extension to see where this might be going from the high that we recently saw, which was 60.13, so lower than what we saw in August, then just pulling that down to the low that we hit on April 15th, which was 31.79, and then going up to the high from yesterday. And so looking at that, excuse me, I'm just going to make sure that 28.29 is what I have here. I think I was reading the high. 28.29 was the low from April 15th. And then so the 21st here, the high 35.75. So that does look good. Just going to lock that into place and see where that might be suggesting we go. The 100% extension is just the distance from the top here to the bottom, taken from the high over here. And so that suggests the VIX is coming down to $3.91. I don't really see that happening, so I'm just going to remove that. But, just out of curiosity, wanted to throw that up there. But anyways, we'll see, do we start to form a bottom or do we start to continue lower with this, suggesting that the bottom is in with the stock market. So let's flip over to the S&P 500 or the SPY, which is the S&P 500 tracking ETF, which closed yesterday on the 21st down about 2.38%. Closing at a price of $513.88, but now we are seeing a bounce of nearly 1% in the pre-market, trading around $518.50. And so this does look like it has pulled back to that 50% retracement at around $515. We did close lower than that level yesterday, so what I might do is just adjust the Fibonacci retracement to exclude that 382 because we did go below that. And maybe we're finding support at the 50%, but maybe we go lower to the 618, which would be at a price of $507.33. And the low yesterday was about $1.13 above that price, hitting a low of 508.46, and then bouncing from just above that 618. So maybe the bottom is in here and we start to head back up to around 550. So it'll be very interesting to see about that. And I might actually just delete this doodle since it kind of has played out, but we didn't get all the way up to 558, this line here. We did get rejected at a high on the 14th of, let's see, $544.28 before pulling back some here. But let's just real quick look over at the 10-minute time frame, and we can see that this did, pull back during market hours yesterday. Kind of got this double bottom here. Looking at the volume, it does look like low volume over here, and then at this push up, volume started to pick up, suggesting that we might be getting this rebound. So I think that looks really nice. Held the gains into the after hours with kind of a last 30-minute push up towards the end of after hours trading before this gap up here. And we are now holding those gains from the after hours yesterday into the pre-market today, hitting a high during pre-market of $519.59. We'll see, is this MACD that did flip green here, is this going to flip back to green once the market opens? Will be very interesting to see. But then thinking about that and thinking about, the volume that we're seeing here, let's see, pulling back here. Yep. It's kind of flat. It does look like the MACD did flip red, but hopefully that's short-lived. But then real quick, let's look over at the SPX, which is the S&P 500 index, which closed yesterday at a price of $5,158.20, being down about 2.3% on the day, pulling back to that 50% retracement here, going below that 382. So let's adjust that. So we are excluding the 382 and then adding the 618, which we did not quite get to yesterday. On the 21st, we hit a low of $5,101.63, whereas that 618 is at $5,081.33. and 93 cents. And that does look like it kind of coincides with the overlap of, really the top of this candle here, or the base of that wick, also coinciding with the trading over here and over here. So there's a lot of overlap at that level. Maybe that acts as support. So it will be very interesting to see if we do in fact get a bounce, or if we do start to break lower than that 618. But, thinking about things, that are going up or potentially going up, slip over to Bitcoin here, currently trading just below $89,000. And I have to say, I did not pick up the BITI or SBIT short yesterday. I just thought, I'll look for a really clear, exhausted signal. Instead, what I did is I picked up a very small short position on gold. And I feel like I'm probably going to regret that, because I feel like if Bitcoin is launching, that it may perform better than gold in the time that Bitcoin is launching, but it may also be coinciding with gold going up. So that might be an incorrect trade, but we'll have to see how that plays out. But anyways, about Bitcoin here, and I did make a video on that gold short if you're curious, but so far, it's not playing out that well. But anyways, yeah, Bitcoin here. Let's see. I mean, we are just continuing up higher. It looks like the high from yesterday, and this is, in Webull, so it's not the best for looking at crypto, but the high from yesterday was around $88,900. And we are trading below that now, so it will be very interesting to see if we can push higher, get above that. And this is something that's talked about by Crypto Rover a lot, is basically the highs over here right around 89,000. He likes to look at the 3-day chart, which I don't know if I can actually look at that in Webull over here, but really what he's talking about is just flipping above the highs over here, breaking above them, and we can actually see that, the high over here, maybe I should just mark it on the chart. The high over here on March 24th, looking at Webull, and actually maybe I want to do it a little bit lower, so this coincides with the high from over here on April 2nd, which was at a price of, let's see, I'm just going to make it a round number of 89,000. And so what we want to see is a flip of that level of being resistance, marked as red there. We want to get above it. And then let's see, I'm going to leave that doodle there, but what we want to see is a break above this. And actually what might happen is a break above this, get up to around 92, maybe get rejected from there, flip this 89 level as support, and then go higher. So that's, kind of what we're looking at. And so I'll color that green. That's the good scenario. And this over here, well, it's not necessarily the bearish scenario, but it's not as bright green as the one up there. And but yeah, we clearly did see, this is a bull flag consolidation, and kind of like what I was doing with the VIX, was it? Doing a Fibonacci extension. So just going to go from the low over here to the high that we hit on the 15th, and then really just pulling back to the low that we saw, right around there. This is all just going to be kind of wonky. Let's see. Yeah, that's clearly the high there. But, if we look at this, where was the low here? This is actually, the low that we saw on that day is actually a little bit lower. So I'm just going to do a straight line down there. Again, a little wonky, but that could give us an idea of where this could be going. And, coincidentally, that happens to line up with where I have that arrow going to. And so just a reminder of what this Fibonacci extension is. That is just the 100% extension. So that is the move from down here at the bottom to the top here, taken from the low here, and that gets us to around $95,000. So we'll have to see. Maybe that acts as resistance, and so maybe I should color it as so. Just making a red line there. So it will be very interesting to see where this goes to, and I should maybe actually draw this line as yellow, but that is the potentially CME gap, and maybe I want to make that thinner. so it's not so overwhelming. But yeah, so those are kind of my thoughts on Bitcoin, and also, thinking about Ethereum, Crypto Rover. Maybe I'll just pull it up here on this, and let's see. I want to pull up my subscriptions. And so, yeah, he just, history will repeat. You're about to get rich. That's just, YouTuber title type of thing. And so he just noticed this pattern that Ethereum is having that looks very similar to what happened with Bitcoin in 2020. And that's really what I've been talking about with, let's see, my ETHster video that I just recently put out. So I'm just going to pull it up here. Happy ETHster. And I just kind of give a breakdown of my thoughts on Ethereum. I only got 41 views, so not really too popular of a video. But in that, I was really just going over how I've got these historical levels, one being the all-time high from 2018, another being a trend line based on a pivot high and low. And both of those levels kind of coincide around $1,400. We did wick below that level, it looks like on April 8th. And now, bounce consolidation. Maybe this is a bull flag, but maybe it's getting a little bit exhausted. Maybe there's like a double top there. I'm not really sure. But currently trading around 1,600. Basically, I think that Ethereum could be hitting 8,000 by the end of the year. And, I kind of break that down in that Ethereum or that ETHster video. So I'd encourage you to check that out if you're curious. And also, of course, to check out Crypto Rover. He does really nice analysis on Bitcoin and Ethereum, other altcoins on occasion, but mainly just Bitcoin. And I think that he gives pretty good perspective, but you also have to consider that he is talking about it, as a YouTuber, making videos, getting those views. To be honest, I don't really try to do that because I find that whenever something gets more views, it tends to be a top because people, we're sheep, and we chase things at the tops, and we are bored by things at bottoms. And Ethereum has been really boring, and we can just see that here from the top over here that was hit on December 6th. Then we hit a double top on December 16th. This has just been, in this very boring downtrending channel. Nobody's excited about that, but we have not broken above. And so I think that could be coinciding with breaking above 1,800, getting to 1,900. And so we'll have to keep an eye on that. And the last thing on the list, I got about 15 minutes left before the hour, and I'm going to tune into Gareth Soloway and then Scott Melker. But here we can see ticker symbol URA. This is the Global X Uranium ETF, which closed yesterday down almost 2%, trading around $22, or closing, I should say, at $22.45, but being up about 15 cents in the pre-market, or 0.2%. And so it does look like we are getting rejected from that green line, which is a trend line, pretty cool, going back over here to the lows from August 5th and September 6th. Two notable days in the market there. Did act as support over here before we broke below it. And then, we've been consolidating below it. So maybe that suggests this is a bull flag. We're going to break higher. And let's actually do another Fibonacci extension where that could be suggesting that we'd be going from that low of 1950 up to, let's see, the high over here of 2331. And then the low that we saw yesterday was 2212. So just barely pierced that 1618. I believe that's an extension, Fibonacci extension. And so if we just look at that suggests price could be going up to around $26. And so I'm just going to color that as red because I think that would be acting as resistance. But we do have these other levels that I've kind of doodled out that might be acting as resistance, being around 2450. And then also this yellow downtrend, which had previously acted actually not really as support over here. Over here it did. That yellow downtrend is actually the base of this parallel channel, which I was going to say may not be that significant anymore. It's based on the two highs here, the low over here, but we did consolidate above it over here, bounced, retested before going up to the top. then consolidated in the middle before breaking below, consolidating below, getting rejected over here. And so I suspect that will be another notable level in the future. And then we do have this 786 here, which, maybe coincides with that yellow downtrend, the base of that parallel channel. So we will have to see. But we did get, a retest effectively of 22, hitting that low of 22.12. Maybe if we look over at the 10-minute time frame, what was the absolute low? Yep, 22.12. We did pierce that 1618. And but yeah, there's still a possibility. So I think it's good to prepare for that possibility of heading lower to around 21, but maybe not quite getting there. Maybe finding a bottom around 21.50. But yeah, that's pretty much all I have to say about those tickers. So I'm just going to open up the chat here in case there's anybody over there with some comments. And it doesn't look like there are, so I might end this pre-market prep a little bit early. I don't know if you can tell in my voice, I'm a little bit tired. And yeah, just going to be getting ready for the market. Yeah, I'll try to put out a video today during market hours rather than recording that here live. I'll just do it once the market's open, kind of like what I did with gold yesterday. But anyways, doesn't look like anybody's with me anymore, but I'll just throw this up here at the end. As you know, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos.